Hello and happy Monday to everyone out there. I hope you're all staying safe during these absolutely intense times that we're going through right now. Today I'm going to discuss some new unemployment information and give some context as to what exactly it means. I'm going to answer a few of your stimulus related questions regarding stimulus payments and the chaos that's going on right now. And I have some stock market news towards the end as far as the broad market, and I react to a claim made on Apple stock. So let's get right into it. Data has come to light that the recent massive loss in employment we've seen across the country is disproportionately affecting women. A portion of this disparity comes from the fact that women have higher employment levels in many of the most affected industries, including things like retail, leisure, hospitality, education, and health, all industries that are being crushed right now, unfortunately. Data shows that 15% of females who were employed in January have lost their jobs since then. That comes out to about 1 in 7 working females. We should see this rebound slightly in the coming months as things reopen and consumers have more confidence to actually go to stores and buy things. However, this is just yet another statistic that was absolutely shocking to me once I read it. The more I read into all of this, the more I truly believe help is a necessity, and I just absolutely feel for all the people who are having to deal with this chaos that is no doing of their own. That's the really unfortunate part, that no one did anything to ask for this unemployment. After reading this, I was curious if women are always more exposed in recessions. However, you may be surprised to hear that in the last 2008 recession, we actually saw a much higher proportion of men who had lost their jobs. The employment ratio for men in that time dropped 7%, while the employment ratio for women dropped 4%. The disparity back in 2008 was largely because of the effect of the recession on the construction and manufacturing industries. So as we can see, it's not like a sex thing. It's just primarily which industries happen to be affected by the recession, which is good. It's not some kind of institutionalized sexism or anything like that. All right, that's enough on unemployment. Let's move on to some of your questions. The first question is, do you think the riots will make a next stimulus check less likely? So, of course, anything I say here is just speculation, but no, I don't believe it's going to change the odds a whole lot. Yes, it's extremely unfortunate what's going on, and our country obviously needs some kind of change, but I don't think lawmakers will just assume that we don't need additional payments anymore. However, if they are preoccupied by what's currently going on, I could see it potentially taking a little longer if there's a delay in the legislation. You know, I try to look at the bright side, the more compassionate side of things, and if we take a more compassionate view on all of this and the legislators' point of view, I hope that they may look at everything going on and think, wow, people obviously are really hurting right now. What can we do to help? And that might lead to more help, more stimulus payments, just more things to get the general mood of this country we're living in to increase. Overall, what's going on right now is just extremely sad, and I hate seeing both the abuse of power by the bad actors in law enforcement and then what the American people have to do in order to get their point across. It's really frustrating, and I mean, I don't want this to be overly political or divisive or anything like that. I feel bad for just all the parties that are hurting right now. And like I said, I just believe change is obviously needed. I lived in Minnesota for the first 18 years of my life, and it's so sad to see what's going on there. I have friends from back home whose neighborhoods are being patrolled by police and nearby businesses are destroyed. It's just really upsetting, and that's kind of all I have to say on it for now. So let's move on to the next question. The next question asks, I received my $1,200 stimulus for myself, but nothing for my 2 children. I used the non-filers tool, but nothing. What can I expect? So this sounds like because you use the non-filers tool, I'm assuming you haven't filed taxes in a while, possibly not since you've had children. In this case, the IRS may not know that you have children or that you are owed a dependent payment, which this should have been addressed when you filled out the non-filers tool. So this means to me either you didn't fill out the non-filers tool on time before the deadline, or the IRS hasn't processed you completely yet. I don't believe you're going to get another separate $1,000 check, $500 for each dependent, because you already received that $1,200, simply because I haven't heard of that happening to anyone. I'm not going to say it's impossible, but I just haven't heard of it happening. But either way, you still will be eligible for that dependent payment. You'll just likely have to file for it as a credit in your 2020 taxes. So that's all I have for questions today. There were just 2 of them. If you have any other questions, feel free to leave them in the comments below. I'll go through them and try to answer 1 or 2 on a future video. So moving on to stock market news. Today we saw a shaky opening to the markets with the S&P 500 and the Dow opening just under 0.5% down from last week. Wasn't too bad. Currently, as we're recording this video, the Dow and the S&P 500 both rebounded a little bit and are up 0.3% and 0.4% respectively. The shaky opening this morning is pretty obvious, with the protests turning into riots and all the uncertainty that's in the air, as well as growing tensions with China over Hong Kong. There's just some more uncertainty in the air. I personally believe there probably should be more uncertainty than there really is, because I personally don't see consumer confidence very high. I don't see many people going out and buying things, but I have much less information than the entire market as a whole does. So despite what's going on, some analysts think that Apple stock will be a big winner in the next few years. So I kind of wanted to comment and do some research and kind of react to this. Apple currently has a market cap of $1.4 trillion with a T. So they're a huge company. However, news is circulating that it may be the first company to become worth $2 trillion by the year 2024, with a few people placing heavy bets on that future valuation. So I took a look at the financials, and let me give you my opinion on Apple as an investment right now. First off, I have to applaud Apple for its profitability. A 27% operating margin for such a large company is absolutely amazing. That's wonderful. Also, their customer retention is great at almost 90%, and AirPods have been a huge success and a huge driver of revenues for them recently. So those are all strong points as to why Apple is good, a good investment anyways. However, people know this about Apple. They know that they have good retention, that they have good profitability, that they have products that earn them money. And because of this, their price reflects it. Apple currently has a PE, a price to earnings ratio of 23. And a simple way to look at a P to E ratio is to think of it as the number of years it would take to make a 100% return on your investment at current prices. A P to E of 23 equates to a 4.3% return. You get that by taking 100% return, divided by 23, which is the P to E, which equals 4.3%. So a bet on Apple right now is a bet that they're going to be making big moves in the future. That is, if you're hoping for a more than 4% return. If you're expecting them to do the same, then you can expect a 4% return. So looking at the recent past, I personally don't see where the growth would come from. Their sales of phones have actually decreased in recent quarters, and this isn't actually a super recent thing. They've been decreasing slightly. They're getting beat out by other phone manufacturers, and some consumers are deciding that the additional price for Apple just simply doesn't make up for what you get in the phone, because now there's just so many cheaper phones that are 98% as good, with the leading factor why many people choose to stick with Apple being other people have Apple. I personally don't have an Apple phone. I have nothing against their phones or anything like that, like some people do. I know a lot of people have a big grudge against one phone or the other, but seems like they're great at keeping people in the ecosystem because of iMessage, and that drives people to buy more phones. But the technology isn't really a reason anymore. Where at first it was like the iPhone, you got to get the iPhone because the technology is so great. It's kind of evened out. That's not really a factor so much anymore. So the sales of phones have actually decreased, despite customer retention is still good. And they've come out with no revolutionary products in the last few years. I mean, a lot of the times it's just an iteration of the last year's iPad, phone, whatever, just slightly faster than it was the year before, or slightly thinner than it was the year before. I'm not saying that isn't the case for most phone companies, because it is, most technology companies, but Apple became valued so much, so highly, because it had a few revolutionary products like the iPhone, things like that, that really just took them to the next level, and we just haven't seen anything like that recently. So any bet on them right now, hoping for a large return, is a bet that they're going to come up with another revolutionary product. The analysts are thinking that Apple could be worth $2 trillion because they believe augmented reality could be their next big, like, winning hit product. However, only time is going to tell on that front. And also, analysts are saying that, this is only some analysts, by the way, are saying that it's a good time to buy because their PDE is at 23, which is typical for hardware companies, but you shouldn't look at them as a hardware company, and a PDE of 25 to 30 is more realistic for this company. I personally think that is really high. I wouldn't buy a company with a PDE of 30. As far as my investments go, I always look for under 15 because I want a company that is producing a healthy cash flow and healthy profits, but is currently priced quite low. And again, this is not to say that Apple isn't a good company, but it just isn't a purchase I would currently make as a value investor. Again, as a value investor, I'm looking for a great company that is currently, for whatever reason, undervalued, and I just don't see that with Apple. If the price were to go down quite a bit, then I might change my mind on that factor. So finally, if you are interested in getting into the stock market, check out the brokerage Webull, W-E-B-U-L-L. If you open an account using my link and deposit $100, you'll receive 2 free stocks. Many people have received 2 Levi's stocks in the last couple of weeks since I've been doing this promotion. Each one is worth about $14. Not bad. Make 28 bucks just by depositing 100. It could be quite a bit higher, but a lot of people are getting those Levi stocks. Hey, that's a 7 times better return than you would get on Apple. So the link for that is in the description below. And I'd like to thank you for watching, and I hope you have a profitable day.